how could a bank on yourself type policy be an alternative line of credit for Jasmine or maybe even your business? Well, here's a top 10 list. Number 1, a guaranteed interest rate. Loans from a whole life policy have a set interest rate that's usually lower than the variable rates that banks offer, which can increase over time. This predictability of the rate will help you, I think, in your financial planning and modeling out your business's next year, and the year after that, and the year after that. Number 2, no credit checks or approval process. Accessing your own policy's cash value does not require a credit check or some sort of banker's approval. It makes it immediately available regardless of your current financial situation or your credit score. Speaking of which, number 3, borrowing from a policy has no impact on your credit score. Borrowing against your policy doesn't affect your credit score since you're not going through traditional credit channels. And repayments on policy loans don't even show up to the credit bureaus. So there's no way for the credit bureaus to even know you have a policy loan. Number 4, flexible repayment terms. While banks have strict repayment schedules, life insurance policy loans can be repaid at your own pace. You'll only need to pay the interest in order to keep the loan active, or you could choose not to pay that interest at all, though this would reduce your policy's cash value or death benefit. Number 5, no risk of loans being called. So unlike a bank line where the lender can demand repayment or reduce your credit line, your whole life policy loan is yours to manage with no sudden demands from some sort of external banker calling to collect. Number 6, tax-free access to funds. Loans from your life insurance policy are generally not considered taxable income, which gives you a huge tax advantage over traditional bank loans where interest might not be tax deductible for personal use. Number 7, dual benefit of the insurance and the savings. While using the policy as a line of credit, you still can maintain your life insurance coverage for your family or your business needs, and the cash value continues to grow, giving you compounding growth while that death benefit remains in place. None of that is possible when you have bank credit. Number 8, protection against market volatility. So again, the cash value in a whole life policy grows at a guaranteed rate. It is insulated from market fluctuations. That provides you a more stable source of funding than investments linked to a market performance. And cash value can even continue to grow while you borrow against the policy. Let's keep going to number 9 for more about that. Number 9, compounding interest works in your favor, not the bank's. So when you borrow against your policy, the cash value continues to earn dividends and interest, even on the borrowed amount as if there was no loan. So this is in contrast to a bank where they take the opportunity to earn compound interest on money you borrowed from them. And finally, number 10, estate preservation. If the loan is not repaid by the time of your death, typically the death benefit is simply reduced by the amount of any policy loan left outstanding. However, this can be strategically used too as a way to pass on wealth to your heirs without any sort of loan burden. You don't have to leave a big policy loan to your family, as the death benefit is simply there to cover the loan balance. It makes sure that your estate is not diminished by some sort of policy loan debt or other debts. Unlike regular bank loans, where oftentimes your business or other assets have to be sold to cover debts that you didn't pay during your lifetime. What a great way to leave a legacy to your family without any sort of sour taste in their mouth. So with all those, there probably are 10 more out there if we really pushed and dug into it. But with just that, how might having a guaranteed line of credit growing every year help you and your business?